Hello, everyone, and welcome again to our continuing series on the American Rescue Plan. I'm Mike Hebron, the Chief Operating Officer with Level Financial Advisors. And in a moment, I'm going to be joined with my partner, Stephen Elwell, CFP, our Chief Investment Officer. And today, we're going to talk about federal support for health insurance, mainly COBRA subsidies and enhancements to the Premium Assistance Tax Credit. That's a mouthful, but Steve's going to explain it all for us. So, Steve, if we can have you jump in here. What's changed under the American Rescue Plan to help people cover the cost of health insurance?
Yeah, there's really been a couple of substantial changes, whether you're someone who is terminated or on unemployment for a little while or a longer period of time, whether you get your health insurance on the exchange or if you lost your job and you went on COBRA. So let me tackle COBRA first because that one's pretty straightforward. So traditionally, if you were involuntarily terminated, you had the option to go on COBRA to continue your health insurance for anywhere from 18 to 36 months, depending on the situation. And you would be able to continue to pay for your own health insurance out of pocket. You'd have to pay 102% of the premium, which effectively says you pay the entire premium yourself, when usually people were having their former employer was heavily subsidizing that premium. So sometimes there's a little sticker shock that came with that COBRA premium, but that's what people would do, is they would continue their health insurance if they could afford to by hopping on COBRA and just paying for it themselves until they hopefully found a new job or went on Medicare. That was a pretty common thing to do. Now, if you've been involuntarily terminated, you can go on COBRA and have the entire premium covered. You pay $0 from April 2021 through September 2021. So you pay nothing to continue your health insurance through COBRA when it used to cost you the full amount plus a little extra. So that's obviously an enormous change and a huge benefit in dollar terms to anyone who's in that situation. And I would add that the technical structure of this is that your employer actually pays the coverage, pays the cost of it. And the employer gets a refundable payroll tax credit to sort of reimburse them from the government. So from your perspective as the employee, I mean, you don't probably really care about that. What you care about is just simply that you're on COBRA with your health insurance continued, and it doesn't cost you anything out of your pocket all the way through the end of September. So that, I mean, that's a huge benefit for anyone that's lost their job or has been fired. And they actually even give you 90 days from within the time frame that you get this notice to even change your coverage level, as long as it's not more expensive than what you currently had. So you can even make even adjustments. So that's a pretty enormous benefit.
So, what about those who have coverage through the healthcare exchanges under Obamacare? What type of help is there in the bill for them?
Yeah, there's so we've helped a lot of people, especially those that have retired before 65, the Medicare age. We've helped a lot of people navigate the health insurance exchanges, what often is referred to as Obamacare. And it was a bit of a maze to begin with. It was based on this poverty line and how high was your income relative to that. And if you got to a certain dollar amount of income, you didn't qualify for any subsidy or any help with the premium assistance tax credits, which is what most people really just call the subsidy, the portion that the government will give you a tax credit to help pay the cost of the health insurance. So what's happened is they've changed the formulas for how those tax credits apply. So most specifically, first part is that if your income is below 150% of the poverty line or below that, then effectively you will pay 0% of the premium cost. So when they measure that, just to be clear, they measure that by, this is going to sound oddly specific, the second lowest cost silver level plan in your area, in your network, on your exchange. So they have these tiers of coverage. There's gold and platinum and silver, and they apply to just how rich the plan is, how much the plan covers, and how much you have to pay out of pocket, maybe as like a deductible. So they use always the second lowest cost silver level plan as sort of like the barometer, the like standard cost plan. And so if you're below that 150% poverty line, they're going to basically say you can have this silver coverage for $0 a month, which is, again, just like the COBRA piece, I mean, enormous financial benefit to anyone who falls in that situation. So that's obviously a really big deal. The second piece that is a really big deal is whether you're at 150% of the poverty line or 200 or 300 or 400, depending on how high your income is throughout the year, they will reduce the amount, the percentage out of pocket that you're required to pay, which effectively means that the subsidies are larger, right through that range. And then typically when you hit 400% of the poverty line or higher income, you didn't get any subsidy. And for 2021 and 2022, that's the 2 years this all applies to, although there is talk of the potential for this to be extended. If you are above income beyond 400% of the poverty line, it's no longer a hard cliff where you go from getting something to getting nothing at all. It used to be a pretty dramatic drop for people and a big sticker shock if you cross that line. And now that line doesn't even exist anymore. Now they just say if you've earned more than 400% of the poverty line, you effectively, your portion of your health insurance premium is 8.5% of your income. And so depending on what coverage you're buying, eventually you get to a point where if your income's too high, you have to pay the full cost. But that phase out takes way longer than what it used to be, which was just basically a hard stop at a certain dollar amount, depending on the size of your household and what you were buying. So it's kind of a big transition, really. Just about anybody who's on the health insurance exchange, as long as your income isn't super high, is probably going to see some type of financial benefit from these recalculation formulas that they're doing. It's important to know that those updates to the health insurance exchange websites, like healthcare.gov, they are supposed to be in effect on those websites by April 1st, which is later this week. So you may not be able to see them if you logged on today, but they should be coming soon. It's also, there's a couple of technical things to know. First, they have extended open enrollment for the health insurance exchanges all the way through August 15th. But keep in mind, if you're going on the exchange because maybe you're going to get a bigger premium subsidy than what you thought, or you weren't even aware that you might get something, or you fall into some of these select groups, if you're going to go on there, you'd want to do it as soon as possible. So of course you can start saving money as soon as possible. You should also know, if you've been on the health insurance exchange the whole time since January 1st, that these changes are retroactive. So you will be seeing benefits from January, February, March being made up, because those are, you'll probably see it when you file your tax return at the end of the year, but they will be made up because all of these amounts are now retroactive to January 1st, even though the law wasn't signed until March. So that's kind of a technical piece that is pretty important for anybody to know.
So the subsidies are retroactive to January 1st, but what about 2020 subsidies? Any changes there?
Yeah, that's another interesting piece. So a reminder about how the system whole works, the entire thing works, is these subsidies are actually in form of a tax credit. And so with any tax credit, the time of when you really get that credit is when you file your tax return, which isn't until spring of the next year. But they structured this specifically to say, well, they make you give an estimate of what this year's income is going to be, which of course most people really may not have a good handle on, so they give it their best guess. But they give you a subsidy based on that estimate. And then at the end of the year, when you file your tax return the following spring, they say, okay, well, you told us you were going to earn X, and we gave you a subsidy in advance based on that. And if you ended up earning Y, whether it was more or less, then we recalculate and we say, oh, you maybe got too much subsidy and you have to pay some of it back, which can be a nasty surprise. Or you didn't earn as much as you thought you were going to, and so you should have got more subsidy, and they give that extra tax savings to you when you file your tax return. Now, why I'm telling you all this is because they made a change for 2020, which people are filing their tax return for 2020 right now. So if this is you, if you were on the subsidy and you were receiving subsidy through 2020 and you're filing your tax return, you're all listen very closely. Any overpayment of subsidy that you received, which traditionally you would have had to pay back for one time only in 2020, you are not required to pay that back. So if you've already filed your tax return and paid some of it back, you should be paying very close attention to the IRS, because they are saying, do not amend your tax return, but wait for further guidance on how they're going to get that money back to you, because the new law says you shouldn't have to have paid that back, and you already did because you already filed. If you have not filed your tax return yet, then you might want to wait until the systems are updated to allow, when you go to file that return, to be clear that you don't have to pay that money back. So it's kind of another sort of after the fact gotcha, where some people maybe had already filed their tax return and then the rules changed. And so that kind of gets a little complex. But the bottom line is, if you got too much subsidy last year, more than what you qualified for, you don't have to pay it back.
All right, that's great news. So shifting gears here a little bit then, I've read that there are some special rules when it comes to unemployment compensation, specifically those who have collected unemployment this year in 2021. What do you know about that?
Yeah, so here's kind of another special scenario. It kind of feels somewhat similar to the COBRA scenario. So if you received at any point, or will receive, end up receiving at any point through 2021 tax year, 1 week, just 1 week of unemployment benefits because of lost job or reduced hours or whatever the case may be, then your household is treated as if your income does not exceed 133% of the poverty line, which means, based on the things we told you earlier, that you would be eligible for the second lowest cost silver insurance level coverage on the exchange for $0. No cost for the entire year if you got just simply 1 week, at least 1 week of unemployment insurance. So think about a scenario where, you had a married couple, and I'm going to make something up. You each earned $100,000 a year, and one party lost their job for a couple of weeks and then found a new job. And their income for the year ended up being 180 or 190,000 because the one person was only out of work for a couple of weeks. You would be treated as if your income does not exceed 133% of the poverty line, even though your income blows by that poverty line, way by that poverty line, which means, again, that you're eligible for this level of coverage at no cost should you need it. So that can be a pretty substantial benefit. It really doesn't matter what your household income is. You can be treated as if it's very, very low, and that provides these benefits when it comes to someone who's looking for health insurance. Really basically ends up being at no cost if they're willing to accept a silver level plan. So you could actually, if you tie this into the COBRA story, let's say you lost your job for the whole year. From April to September, you could go on COBRA for $0 a month. And then from September through the end of the year, switch over to the exchange for the second lowest cost silver plan. And because you got some unemployment earlier in the year and you lost your job, that now you don't have to pay anything for that. And you get yourself all the way through the whole year, basically without paying anything for health insurance. So it kind of is just another little sort of special rule depending on your situation. And you can see who they're targeting here, right? They're targeting people low ends of the income and people that have lost their job. And, when you're going through a pandemic and some of the economy shut down, that's really who the help should be targeted at, right? People that have been hit the hardest financially. One thing that might be useful for anybody who's wondering, what type of subsidy might I qualify for based on my situation in my household, is the Kaiser Family Foundation website has an updated subsidy calculator where you can put in your state and your income and your household size, and it will estimate how much subsidy you'd be eligible for, how much financial help each month you'd be eligible for to help pay for health insurance if you went on the exchange. So we'll put up a slide with the link to that so people can see where that subsidy calculator is and use it to help qualify or figure out exactly what they might get.
Yeah, and clearly they're trying to make healthcare during a pandemic a priority, which it should be, of course, because it's quite important right now with everything going on. So great, great information about this part of the American Rescue Plan. I'd like to invite all of our viewers to check out our YouTube page and subscribe. We have a series of videos on the plan here. This is the 5th one. We'll have more coming out. And until next time, for Steve Elwell, this is Mike Hebron from Level Financial Advisors, and thanks for joining us.